You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Joe Benazzi from OptionPit.com, and Henry the Flowmaster Schwartz from Cboe. The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody, that music means it is Thursday. It's time to rock out with episode 2 of your bi-weekly options extravaganza, known around the globe as the Option Block. My name, of course, Mark Longo from theoptionsinsider.com. Reminding you here, top of the show real quick, make sure you're subscribed to the full network wherever you're getting your favorite podcast. That includes the old tubes. A lot of you coming in on the tubes these days. And then, of course, if you want to go above and beyond, you want to get awesome pro Q&As like our chat with the OG options market wizard, Mr. Tony Saliba. Lots of fun talking crypto with him a lot these days as well. Uncle Mike would love it. Check out the pro Q&A. Awesome one this week. You want to get that, of course, theoptionsinsider.com/pro is the place to go to learn more as we learn who's joining us on the old Thursday edition of the old OB. First out to the hinterlands of St. Charles, where I'm surprised he has time to join us on the show today because A, he doesn't get to say his trademark saying, and B, he's busy furiously planning and game planning to take down one of the big dogs in the Catholic League this weekend, none other than Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to the show. How goes the game planning? Are you planning all those crazy stunts?
Oh, yeah, all the crazy stuff.
Are you pulling the whole line from one side to the other?
So what we'll do, we're going to use option trading lingo for our secret plays. So if we go, if we say calls to the left because it has an L in it, puts to the right because it doesn't have an L in it. So we got all sorts of audibles. So if you're at the game, folks, and you're hearing us saying, Iron Condor, that means we're not going to throw it deep. But if we just say straddle, that means we're going deep.
I would pay money if I went to a high school game, and I heard someone yell Iron Condor. That would make my day out there. I think it would also make the Flowmaster's day, a.k.a. Mr. Henry Schwartz, from the hallowed halls of Cboe East, where he's enjoying some spicy pickles as we speak. Mr. Flowmaster, welcome back to the show, sir. How are the spicy pickles?
Everything is pretty good in New York City this week. It was a little cold, but it's kind of warmed up, and things are good here. we got a new mayor last week. So,
oh, did you? I didn't hear.
Mayor-elect.
I didn't hear. That news was kind of kept down low.
It was in the news. So no, things are good. The market is certainly active today. We got a lot to talk about. We might have to extend the episode 20 minutes.
3-hour trading block. You heard it. Here we go. It is time for the old trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, listeners, let's get down to business on the trading block here today. Tell you what's lighting up our screens right now. The Flow Master gave away the lead here, listeners. The Flow Master clued us in already because it is a hot start to the day out there. Uncle Mike, this explains it now. Now that I'm talking to Uncle Mike, I see how busy he is game planning for this weekend. He forgot to send the email to the cabal to buy today. That's why we're selling off so hard. S&P off over 1.1% right now, back shy of 6,800, right around 67.75 as we're kicking off the show. The Dow off almost a full percent. Dow having an interesting run this week, kind of making up some lost ground. Dow's kind of been the laggard of late, and then all of a sudden over the last few sessions, seems like folks, quote unquote, shifting to value, and all of a sudden we're seeing the Dow outperform. Dow giving some of that back today as well, off about 0.9%. And NASDAQ, as it is wont to do, leading in either direction. Today it is leading to the downside, off 1.75%, because you know what? SoftBank bailed on NVIDIA. I guess the whole AI thing is done. Let's all just wash our hands of it, listeners. And good old VIX cash hanging out a little bit shy of the 20 handle as we're kicking off the show, right around a 19.5. That puts it up about 1.75 points from where it was on the Monday show. So vol getting a little bit spicier out there. I don't think we'll have a logins on the Vol View show on Friday, but at this point, anything could happen, listeners. And then our old pal VVIX at a 106 when we kicked off the show, up about 7 points from where it was on the Monday show. So back above the old par strike. And yeah, I know he's champing at the bit, so we'll let him go first. Mr. Flowmaster, a lot lighting up the tape, most of it to the red. What is catching your eye out there today, sir?
Well, it is definitely a little bit of I wouldn't call it a smackdown, but it's a pretty sharp sell-off, especially compared to, what we've kind of gotten used to. As you said, VIX is getting up there around almost 20. I actually just looked at the VIX decomposition website that we put out, which you can probably find if you Google Cboe VIX decomposition. And that actually helps us see kind of which part of the curve is lifting, basically. And it's actually, there doesn't seem to be any panic. It's not really on the put side. It's actually the call side that's kind of firmed up. So, that might kind of bode okay for this little pullback. I mean, but I would say I just did a webinar on our Mag 10 index, which is going to be launching pretty soon. And everything in the Mag 10, that's just the Mag 7 plus AMD, Broadcom, and Palantir. They're all down, and I'm looking at Meta is actually down 15% on the month. So, still everything is still positive year to date. You still have some pretty ginormous, AMD and Palantir up well over 100%. But it's definitely a little bit of a kind of, I'd say, a broad-based kind of risk off. I mean, you also see crypto lower. You see gold. Gold's up a little bit, but basically more close to flat than anything else. So, it's a pullback for sure. We still are sitting at, really solid year-to-date gains. S&P 500 is up 15%. We're up about 16%. This Mag 10 index is up 42% year-to-date. So it'll be an interesting one. But just definitely, maybe with the shutdown, it was kind of buy the rumor, sell the fact.
I'm just playing around with this. I was not familiar with this until you just mentioned it, this VIX decomposition tool, but this is actually pretty cool. I'm playing around with it right now. You can plug in a couple of different dates, listeners, and it will show you the put skew, the call skew in VIX, and all sorts of interesting info. Why don't you hit on this for our listeners really quick, because I'm guessing if I wasn't familiar with it, Mr. Flowmaster, then probably a lot of them were not as well. What can you do with this thing?
Yeah, so we had kind of a soft launch. This was really developed by my colleague Ed Tom, based on something he used to use to trade. And so you get to pick one day to the next, and then you can basically see how much the at the money vol has changed. So basically, when people think about, the VIX is made of SPX option prices, right? And so when the market moves lower, you're going kind of higher on the, you're using lower strikes in SPX. So there's kind of 6 real components, which is how much did the entire volatility surface shift up by? How much did it stay in place, and did we just kind of shift down the curve? We call that a sticky strike move. Anybody that's ever kind of modeled volatility, it's always a fun mix between, okay, is it a sticky strike world or a sliding skew world? Like basically, if the market gaps down 10%, the at the money vol will be what the 10% out of the money vol was. But if it goes down 10% over the course of 6 months, like what we saw in 2022, the entire surface just kind of shifts lower. Your at the money vol barely moves. So this is designed to let people see. So the one that is currently in production that's available out there doesn't yet do same day, but we are working on it. And so I am looking at the same day change. And what we see is basically it explains the 2 points of movement, and basically 1.5 points is a parallel shift and a expected move, and then the other points that are actually seeing some increases in volatility. It's not the put wing; it's the upside skew and the upside convexity. So we call the skew gradient. That's kind of the meaty calls. Basically, think like 25 delta. And then the gradient, I believe, is the upside convexity is the tail. Both of those are up on the day. So that really does, tell you, okay, we're not seeing any panic in terms of people rushing to buy puts. Now, maybe people have learned their lesson. That really has not worked out very well, except maybe if you did it kind of right before Liberation Week, or you did it right before October 10th, when we did get some solid sell-offs and pretty good vol pops. But the VIX decomp tool is really it takes a single number, which basically, yes, market's down, so volatility is higher, and it really lets you see, like, oh, interesting, they're not, is it getting bid up in the far out of the money tails? And if so, is it on the call side more than the put side, or vice versa? So it's a great educational tool too. It just lets you visualize, okay, here's the curve, and here's what the curve was yesterday, and this is the change.
No, that's fascinating. Look at you sneaking out a cool tool right under the radar for me, sir. But I've been playing with it as you were speaking. You're right. I was trying to figure out how I do intraday, so I'm glad to see it wasn't me. The tool doesn't do that yet. But listeners, check it out. It is in beta, but it is really cool stuff. And these are the questions we ask all the time on shows like Vol Views, Henry. It's, where is this move in VIX coming from? Is it from the puts? Is it from the calls? What's going on? So this will help you answer that question, listeners, which is an important question out there if you're slinging VIX or any of these products that key off VIX out there. So fascinating stuff. I'm going to be messing around with this. We'll probably talk about it maybe a little bit more on Vol Views tomorrow, but check it out for yourselves. We'll tweet out the link, or as Henry mentioned, just search for Cboe and VIX decomposition. If you can spell decomposition, you get bonus points out there. All right. Out to the land of St. Charles, where everybody can spell decomposition and everyone can spell pulling guard. Mr. Uncle Mike, sir, what is catching your eye in a decidedly not Uncle Mike type of day?
No, I was thinking of, there's really nothing I can say today. But, what's catching my eye right now is, I think I went on a tangent about how wonderful options were. I think that was last week in the trading block. And I still want to say that they are wonderful because of the fact that right now in our covered call portfolio, 60% of our stocks are still in the money. However, not in the money by as much, I will say that. But we actually wanted to have a little bit more of a cautious stance this month. And at this stage, I would say that with 8 days left till expiration, we're not in a position to where we can close out the covered calls because the volatility, there's still too much juice in the calls. And we still like the stocks ultimately. So I am actually hoping that these stocks can stay in the money over the course of the next 8 days. So I'm getting paid to sweat right now, if you will, as the covered call portfolio guy. So that's where we're at this stage. But like I said, even if we do have another leg down in this market, which is very possible, you never know. We were able to protect in such a way by selling these in the money covered calls on the stocks this month. And that is one of the benefits as to what options can do for you. I'm very much a believer in buy and hold investing. We have clients in buy and hold investments, of course, but there's sections of your portfolio I think it's really important to diversify in such a way to where you have hedged equity. Today's obviously a reason to show why that's important, but also within the covered call section of your portfolio to where you're looking to get income in certain ways, or to just view this as an alternative to actually invest in short volatility through covered calls if you'd like. You have the ability to be flexible without getting too far from your initial objective of what you're looking for. And days like today are the very essence of why options are the greatest financial instrument that's ever been invented, in my opinion. So I think it's important that we use them in the right way. And days like today, you're able to do that. So, for example, if you're totally flat today and you're concerned, you're looking to get into the market in some way, shape, or form, it might not be a bad day to sell some out of the money puts. If you're bullish, you're going to get more premium for them, or you're going to be able to sell them further below the strike price than you normally would, because we do have a 20 VIX, and I'm talking very generally. It's not going to be the case with every stock, but days like this can represent opportunities. And oftentimes, if you can take advantage of opportunity days like this, you can be a lot better off than if you didn't. And if you're just staring at your portfolio and thinking, oh, darn, the market's down today, which don't get me wrong, I did say, oh, darn, the market's down today. But if that's all you're doing, then you're missing out on opportunities. And so I think that's what really needs to be emphasized to our listeners today. What opportunity is there for you today? And if you were just in long-term buy and hold investing, then, well, like I said, I believe in it for whatever section of the portfolio it makes sense for the client. But if that's all you're in, you have no opportunity today. However, if you're doing things such as covered calls, protective puts, or you're keeping some money on the sideline, or you want to shift risk in certain ways, there's a lot of things that you can do on days like today, even when the market doesn't look so pretty. We're down 1.4% on the day. So that is what I am seeing, and that's what I'm emphasizing. And yeah, that's what we're doing.
Speaking of taking advantage of opportunities and doing stuff, have you ever thought about taking both tackles and pulling them both and just swapping? Confuse the hell out of the defense. You end up doing nothing with it, but it would certainly look pretty funny.
You're really getting into this game for this Saturday, Mark.
I'm just having fun. I want to see the Iron Condor play in action. That's what I'm looking forward to. I'm going to go to my son's game tomorrow. I'm going to yell out Iron Condor from the sideline. People looking at me like, what is this guy? Who is this weirdo on the sidelines? Even though they already probably do that. As we keep on rolling, out to the land of the options. Is it a spicy day out here on the options front? Well, let's find out, listeners. Looking at the VIX lens, it certainly is hot, and we now know with that VIX decomposition tool, you can look at that lens in a lot of new ways, which is kind of interesting. VIX right now, right around 709,000 contracts on the tape, so a pretty spicy day, all things considered. We've seen multiple days over the last few weeks where we haven't gotten this much volume in an entire day, so pretty active out there. The ADV is 921, so still spicy. I've always said when that ADV for VIX gets north of 900,000, when it's threatening 1 million, then you know things are kind of interesting in the market. You can't sleep on a market that has a close to 1 million ADV VIX. Then you know things are popping off. And speaking of popping off, what is popping off in VIX right now? The hot option out there today, 41,000 of the DEES 21. So we're going back to the upside, listeners. Average price for these, nearly $2. So as with everything VIX upside, they are not giving it away. Thought we'd ask you folks, since we saw that look kind of fun. We said 41,000 D's 21s for $2. Are you a buyer, sold to you, or would you rather maybe trade them as part of a vertical? Right now, this just went live a few minutes ago. 40% of you, actually we have a tie, about 40% want to buy them, and 40% want to sell them, but as part of a vertical. So obviously you're buying something probably lower than that. So maybe what, an 1821? Doesn't give you a lot of opportunities in a vertical, but I suppose you could sell them and then buy something farther out of the money if you were so inclined. But interesting stuff. Only 20% want to sell them straight up. Nobody wants to buy them as part of a vertical, which is kind of interesting. But again, that just went live. We will keep it open throughout the rest of the day, so you folks listening later on the podcast can play along as well. Let's do a quick top 5 in VIX land. Number 2, 36,000 of the NOV 17 puts. Number 3, about 30,000 of the DEES 18 puts. Number 4, 29,000 of the DEES 20s. And number 5, 28,000 of the DEES 20 puts. So the 20 strike in DEES seeing some action. Speaking of seeing some action, SPY is no slouch out there today. Over 7.5, about 7.65 million contracts on the tape out there for SPY. So looking pretty robust out there in SPY land today. The ADV is about 9.75 million. So certainly on track to hit that today. The S was closing in on 3 million as of a few minutes ago. It's just within spitting distance of it. 2.97 million contracts right now, listener. So that is a spicy day indeed for the S. The ADV is about 4.3 million. Certainly seems on pace to hit that today. And you know what's been on pace for just a banger month is the small caps. Volume-wise, volatility-wise, small caps have been where the action has been for a while. Is that continuing today? The answer is a resounding yes. Almost 1.5 million contracts on the tape already. Again, if you've been playing the home game, if you've been listening to the hot options report for the last few days or months, you know that there's many days we don't get that in an entire day. So 1.5 million, nothing to sneeze at. The ADV a little over 1.8, probably going to get there today unless small caps completely stop trading for the second half of the session. And then the Qs not looking to be outdone. The Qs saying, hey, don't forget about me out here today. The Qs, 4.25 million contracts already. This is some wild paper here. The ADV is about 5.2 million, so less than 1 million contracts from their ADV already. So the Q's looking wild. I mean, we'd literally have to stop trading right now to really have these names not hit their ADV in the second half of the session. Again, stay tuned for the hot options report later today. We will all figure out collectively whether we have gotten there or not. Speaking of getting there, did we get there in single names today? Is it a spicy day in single names? And you know what? I just re-racked it, listeners. So we just passed the 400K threshold to break into the top 10. 401,000 contracts to be precise. That gets us to our old pal, the artist formerly known as Facebook. Not quite at a certified banger. That is at 450 in our analytics, listeners. But 401,000, certainly nothing to sneeze at. That's 50K plus beyond our threshold for respectability. Again, Meta, number 10 today, 605, off another $4 or about 0.2%. As the Flowmaster has alluded to, just kind of been a drubbing for Meta over the last month. They were 751 just about 2 weeks ago. So again, 150 handles almost right off the top. They tried to rally it a bit over this past week. They got them back up to, looks like about 633 or so. So they have given up, again, that 30 handles from there and come right back down again. So wild stuff. Is Meta the straw that broke the rally's back? I mean, it seemed like everyone collectively said, you know, either it was Meta or maybe it was Palantir, one of those two, where everyone's just like, you know what, infinite spending on AI without any sort of return, or in the case of Palantir, also a absurd multiple. Maybe that 1-2 punch was the combo. Either way, things have looked down for them lately. Number 9, CoreWeave. This is another hot one that has not exactly looked so hot of late. 78.25, off another $7.20, or about 8.5%. They've had a rough run. Over the last 5 days, they're off $25, or about 24%. As you can tell from that analysis, they were north of 100 on Monday. Yeah, they were 110 on Monday. So if you go just from Monday, listeners, this has been an absolute annihilation, just off 32 handles. So CoreWeave not having bueno earnings. Of course, this is the one that had that massive pop off of their deal with was it Google, I think, earlier this year or late last year. And they had a nice run up to nearly 200, 187 back in June. And they are a long way from that, back, about 100 handles off that high. That said, they're still up on the year, $38. This shows how much they have run over the course of the past year. CoreWeave, number 9, 408,000 contracts. Number 8, good old SoFi, just bouncing all over the 30 handle, below it, then back above it. Yesterday, hit a new 52-week high, right back below it again today. $28.50, off about 3 3/4 or 11.5%. So above the 30 handle, below the 30 handle. Today, we are back below it. Number 8, SoFi, 474 on the tape. Number 7, my old stomping grounds of Intel, $36, off nearly $2 or about 5% today. Good for the number 7 spot. Already at 510,000 contracts. We're only at number 7. That's impressive. Some days we get up to number 3. We haven't gotten that high. Number 6, the Amazonians, also giving back to the market gods today. Just ticking again. 237.90, off about 6 1/3 or about 2.5%. We're in the number 6 spot, 516 on the tape. Number 5, the fruit company. I guess they can tick off, if ever so slightly. They're off a quarter. It takes so much to get Apple into the red these days. Even on days when the market is getting annihilated and every other big tech name is down, Apple's still up $1 or up 30 cents. You know, they just have the animal spirits behind them these days. 272.5, off about $1 or about 1/3% right now. I guess that stock buyback, 100 handles lower. Looking like a pretty good Jew right now. Number 5, the fruit company, 557 on the tape. Number 4, keeping it in A, tech names, AMD. No, their CEOs came on CNBC yesterday and just talked up the stock, and it worked. They popped like 20 handles, giving some of that back today. 250, pretty much exactly, it's breaking through it now. 248, off about $11 or 4.25%. So I guess that pop was a little bit ephemeral, at least for now. Number 4, AMD, 719. Number 3, Palantir, Uncle Mike's most watched name, 173. We haven't seen this level in a little while. Off a little over $11, about 11.15 or about exactly 6%. Good for 761. Now, if we know Palantir, if it's playing by the same script, it's due for a huge rally second half of the session. So we shall see. Can Palantir make the upswing out here? It's been a 0-day monster of late. Number 2, NVIDIA, 185.25, off $8.50 or nearly 5%, about 4.5%. So you know when NVIDIA's off over 4%, it's an interesting day out there. Putting up 2.36 million contracts. Like we mentioned, SoftBank bailing on them. Now, bailing, they're taking a ton of profits. Who can blame them? But that is getting a lot of headlines out there. SoftBank hasn't exactly been hitting snake eyes on all of their bets of late, but they did all right on NVIDIA. I think that's gonna fund a lot of their misses, which have been legion of late. And then Tesla, interesting level here. Back below the par level, back below 400, 398 exactly, off 32.5 handles. What's going on out here? More sellers than buyers. It looks like maybe Kathy Wood. Is she out on Tesla? She's been a big supporter. Maybe that's what's going on. Either way, more sellers than buyers out there today, kid. 2.5 million, 2.55 million. So Tesla, we've been talking on the hot options report lately about 440s, 450s, 460s, wild upside call paper, and going for hefty premiums, 9, 10, 11, $12 each. If this move continues, all that paper is going to die because you know most of it is buys out there, listeners. We'll see. Tune into the hot options report later today to see how all this is playing out. Speaking of playing out, it's been a wild front on the earnings season again this week. CoreWeave, we mentioned already, they were on Monday kind of screwing the pooch. Our old pal TeraWulf was also popping off on Monday. Listen, it looks like they also kind of screwing the pooch. They were nearly $15 on Monday, $14.70. Today, $11.82, so nearly $3 off of that lofty level. Their 52-week high, $17. So TeraWulf, Q3 loss despite AI revenue surge. So that will do it. I guess you have to start making money as some of these at least smaller AI names. You can't just say and whisper the magical letters and just keep rallying. We had Cisco this week. We won't talk about it for Uncle Mike's sake. Yesterday, or I should say this morning, before the bell, the Diz not exactly crushing it, even though the core competencies, the parks and experiences continues to be the bellwether for them. That's kind of what keeps them afloat. Everything else kind of hemorrhaging money out there, movies, TV, everything else. But they keep raising prices at the parks, and somehow people continue to go. So interesting stuff out there. Also have AMAT popping off today as well. Disney was at 116.65 when we ran this report this morning. They're now down at 107.45. So obviously a big move post earnings. They were pricing in 6.4%. They had delivered 8.3%. And then, of course, if you go back to where they closed yesterday, going into their, they were at 117 and a quarter, looks like, is where they went out. So they've given off almost $10 out there. So a fair amount of juice, outperforming their straddle to the downside. I heard some analysis recently of Disney. If you go back 10 years, they're pretty much exactly where they were 10 years ago. And, I'm looking at this chart right now, and they were at, in March of 2015, April 20, they were at about 108, and they're at about 108 right now. So, yeah, they had a nice run in 2021, obviously, up to nearly $200, but that was kind of all she wrote. It's kind of been a dead decade outside of that, so that's kind of wild. Cisco, they were yesterday after the bell. They went into their announcement at $74. They were pricing in 5.4%. They delivered 4%, so a little bit of underperformance. There, if you want to see all those reports for yourselves, you know where to go. Really quickly, popping off, coming up next week, we have a couple of hot names. Target, 19th before the bell, $92 is where they were trading when we ran this report. They're pricing in $8.13. In the past, they've moved $8, so not expecting a huge shocker there for Target land. Now, here's the one I know a lot of you are queuing in on, and I think the market is queuing in on as well. This is some name called, I think it's Nevada, ticker symbol NVD. I'm not sure how you pronounce that. After the bell next week, listeners, on the 19th, they were at about 194 when we ran this report earlier this morning. Obviously, they've moved a little bit since then. They're off about 10 handles from that. And let's see, they're pricing in nearly $12. In the past, they've moved over 14, though, $14.14. So a little bit of an earnings haircut being priced in for NVIDIA, even though they've already moved their straddle pretty much since we ran this report. So wild stuff out here. If you want to see all this stuff for yourselves, let's be even, Steven. I mentioned Walmart, Target. Let's do Walmart as well. Walmart, 20th before the bell. 103.5 is where they were trading. They were pricing in $4.84. In the past, they moved $4.32. So 52 more cents on top. Seems like somebody in Walmart has gotten the memo that more vol is the way to go these days on the earnings front. Again, hundreds upon hundreds of tickers for you folks to play around with. Check them out on the website. You can also see the earnings season, how it's standing up right now. And looks like this current week, a little bit of underperformance. That's kind of dragging us down. Still at 108%, so still outperforming. But the first 2 weeks were bangers, and we haven't quite matched that yet. So you can see it broken down week by week and the long-term average of 102%. All that fun, theoptionsinsider.com is the place to go, because now it's time for us to go right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, let's get down to business. Let's get weird. Let's get wild. Let's unleash the Flowmaster and see what he's spotted out here. Mr. Flowmaster, I'm glad you picked this first one because this came across our radar today as well. And we just didn't have time to parse all the flow that was going up out here. So I'm glad you opted to do it. This is also just a great name. This is Bitdeer Technologies Group, ticker symbol Bitdeer, BTDR. I just love the name. Trading $11 exactly, off almost $3 or about 21%. So not exactly a great day for Bitdeer. This is a crypto mining platform out of Singapore. So again, a newcomer here to the show and the network. They've had an interesting run. They were $11 a year ago, so they are pretty much unched on the year, even though they've had a lot of fits and starts along the way. Rallied all the way up to 27, almost $28 back in January, then sold off in the nadir of April to $6.84, and then rallied again in October, right up to about a $26, $27 level again, mid-October, and then coming right back down. It looks like a bad earnings announcement or something over the last few sessions, really clobbering it. Looks like they're maybe dumping more stock Oh, a convertible. Yeah, so they're diluting their stock. So that's probably what's walloping the stock out there today. So not a great day to be long the deer, Mr. Flowmaster. But what did you spot out here in a whole, I think the term is a metric ton of flow, sir?
Yeah, it's an interesting one. There was a block that kind of caught my interest, and it was directional. It was a buyer of 2,153 of the December 12-hour calls, paying $1 for those when the stock was at 1107. Doing a secondary, that the existing shareholders do not like that. And I also saw some other headlines, some other mining companies kind of pivoting to AI power or something like that. So, there's maybe a little bit of a reshuffle of things. But like as of right now, though, besides that directional, it appears to be bullish. Although it's, that one does seem to be looking for a bit of a bounce. But in terms of overall volume, we see 62,000 calls have traded, only 7,200 puts. And it is kind of all over the place. There are a few big blocks besides this call buyer. There's a couple big spreads. It looks like the no 12-13 call spread looks like that was bought about 4,500 times. Looks like it was a roll down from the tomorrow 16F, 17F call spread into the slightly longer dated week later 12-13. So the flow generally looks like it's kind of positioning for a rebound. It was an odd one. I don't think I've ever looked at that name before.
You just like the name. You like saying Bitdeer. You can be honest with us, sir. It is it's not quite as fun as maybe TerraWolf or the best name of all time, Wolfspeed. But, Bitdeer, I love these companies just combining two completely unrelated things, usually with an animal. I like this new trend, Mr. Flowmaster. I'm here for it. Is Bitdeer the new Wolfspeed? Listen, I'll let you folks judge. As we keep on rolling out to a segment that's been interesting to watch of late, Rivian been kind of on a bit of a tear, so let's move our gaze to that sector, but to Lucid this time. Lucid Group, haven't talked about them in a while. Looks like coming on hard times today, 15 1/3, off about $1.25 or 7.5%. So giving back some of their luster. In fact, on the year, they're off $6.50 now, or nearly 30%. So kind of been a rough year. And of course, if you go from their apex, which was this is another name, listeners, that kind of topped out on Valentine's Day and tried to regain it once. But other than that, has kind of had a rough year post Valentine's Day. They topped out, it looks like about $36.50 on Valentine's Day, then sold off hard. By March, they got down to $20. So they got crushed. They rallied a couple of times. In May, they got up to $29 again, then sold off again to $20 in July. And then back up late July, they got up to almost $31 again. And then they came for it again. They crushed it right back down to $16 in September. And it seemed like that was all she wrote then. Then they tried to rally it again, almost $25 in early October, and then right back down another $10 to where we are again today. So, Mr. Flowmaster, somebody keeps trying to bid this thing up, and it works for a few sessions until it doesn't. Then it looks like it completely runs out of steam, this name. So if you've been range trading this one this year, you've been doing all right. But what did you spot out here in Lucid? Is somebody trying to bid it up again, sir?
Yeah, it is. This is kind of an interesting one. I mean, as you said, the stock is severely beaten down. The trade that I was looking at was the November 28th, 17 calls, I believe. Yeah, a buyer of 4,025 of them for 63 cents, and stock was 1578 at the time, so we're down another 50 cents since then. They do open, and those expire 2 weeks from tomorrow. There is, again, a little bit like what we were looking at before. There's a lot in there, a lot going on in there. So, I think that if you're looking for a very beat down electric vehicle maker at the moment, this is your name. I mean, I think it's compared to where I believe it's down about 50% from where it was in February. So very, very hard hit. Skew is still actually positive to the call side, but that's kind of how some of these names have just been positioning. I actually reran that query I've talked to that I chart the number of kind of upside call skew names or inverted skew names, and send it to a client, and we were kind of back up towards highs like 22-23% of the names configuring to kind of higher call than put at the 25 delta. So it's an interesting one. I don't know if I would. I don't know. I've seen their cars on the road. They look nice, but this stock is certainly struggling.
Yeah, that's putting it mildly. I just did a long-term chart on this, Mr. Flowmaster. You don't even want to guess the level it got to in November of 2021, because it will just bring a tear to your eye. $552. Ooh. It was trading in November of 2021, listeners. It is now approaching its new all-time low of 15 and change. So, yeah, this stock, I think, to put it mildly, coming under some pressure here. Looks like an analyst company just cut their target in half as well. So that's what's weighing on it today, on top of looks like another one issuing some more convertible notes. So that's obviously some more dilution on top of it. So kind of a 1-2 punch for the stock. But man, if you bought this thing in 2021, you have been on a rough ride. At this point, you might as well triple down at $15. Go big or go home. But wow, that's a rough one. You think you're in having some pain in a position, listeners. Imagine being someone who bought Lucid in 2021. Speaking of wild names, Mr. Rock Lobster, I don't think they get much wilder than this one, at least recently. This was Rigetti. I said it on the show on Monday. It's an embarrassment of riches after the bell on Monday in terms of just wild quantum and meme names. It was TerraWolf. It was CoreWeave. It was Rigetti. Ass Space Mobiles. Every meme, wild nonsense name we've talked about over the last year and change was all popping off on Monday. It seems like for the most part, all of them kind of screwing the pooch. Looks like we can add Rigetti to that list as well. Rigetti, ticker symbol RGTI. You know them. They're the quantum name, listeners. Trading 25 and a quarter, off a little over $3 today, or almost 11% just today. On the week, they're off nearly $8, or almost 25%. So obviously, earnings no bueno. They were at almost $35 going into their announcement last Friday. So again, they're off about $10 from that. On the year, you know, even with this sell-off, the run-up in the stock was so wild when they announced their deals on the quantum side. It went from, the stock was $1.28 a year ago. So they're still up 1,300%, Mr. Flowmaster. Even with this just absolute annihilation in the stock, they got as high, listeners, as $58.15. So if you bought the forever call, aka the stock, at around $1.28, you were looking pretty good back in early August. You're still looking pretty good. Who am I kidding? You go. Anyone would buy a stock for around $1 and let it go at $25 and be pretty happy. But that said, Mr. Flowmaster, the recent chart for this one, not looking so bueno. What'd you spot out here in Rigetti, sir?
Yeah, this has yeah, as you said, it's meme month here in the options business, and you know, this is kind of one of those crazy ones, right? From single digit to 25, you know, briefly 50 something bucks. It's call buyer, and it was somebody paying 28 cents for just about 8,000 of the November 35 calls. That's opening, and there's some other. I actually see what looks like a put seller early this morning, possibly as part of a spread. But you know, I mean, you know, after AI, I guess, you know, quantum does pop up as this, you know, kind of groundbreaking potential, and I think somebody here might be kind of, you know, might be taking a stand, might be saying, all right, we've pulled back, you know, about 50%, and now I'm in. But again, it's yeah, you know, today's it's not a horrific sell-off today, but you know, 1.5% certainly hurts, and you know, it'd be interesting to see if any of the dip buyers come back. I mean, you got to keep in mind we were at all-time highs not long ago, so we're really not far off. But these days, especially because people get a little bit complacent, and we're still up 14% year to date, but they probably won't be thinking about that. They'll be like, looking at the market and going, "Wow, we 1.5% in the S&P, and 2% or above in Nasdaq and Russell." People will notice. So we'll have to see basically what kind of behavior. But as I said, in terms of that VIX decomposition, we're not seeing any scramble for puts currently.
Let's see what people are scrambling for as we do a real quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, really quick, checking in on our flash poll here of these D's 21s and VIX trading for size today for $2. And again, we have a split audience. 37.5% want to buy them. 37.5% want to sell them. And then 25% of you want to sell them, but as part of a vertical. Nobody wants to buy them in a vertical. So wild stuff out here. Get your name in the hat. Make your voice heard out here in the poll before it expires at the end of the day. And speaking of polls, Uncle Mike, our question of the week was very much done with you in mind. No, it wasn't should you pull both tackles and swap them. It was actually something even more up your alley. It was, hey, gold, silver, other precious metals having a historic run this year, which raises the question, can this run continue? If you had to buy and hold options on GLD and SLV, you got to do them both. It's a combo package. Through the end of next year, through the end of 2026, which way you going? Are you buying at-the-money calls, or are you buying at-the-money puts? Mr. Uncle Mike, a very straightforward question for our audience. I think I know which way you're going. Of course, you just liquidated all your silver, so you may surprise us. And then which way you think our audience is going, sir? Are they still getting long, the shiny stuff, or are they fading it?
So gun to my head, I don't have any other choices.
No
Either
other
at-the-money
choice.
calls or at-the-money puts.
And you got to hold it till the
months.
end of next year, yes.
I'm going with puts.
Wow. The metals Super Bowl. He's fading the hell out of it. I can't say I blame you. It's been quite the run. I mean, can it do it again? Of course, anything could happen. We can have new all-time highs all the time. But yeah, I can't say I blame you, Mr. Uncle Mike, which is also a surprising
I've been
result.
promising this run to my clients for 10 years. It came, so mission accomplished. We got to move on, at least for now, until it pulls back or something.
You heard it here, Uncle Mike, moving on to his beloved Shiba Inu, at least for the time being.
Yeah.
You think our audience is fading it too?
Yeah, I think they are, actually.
Interesting. Mr. Flowmaster, I know you're not a big metals guy, but do you have any thoughts for where the precious are looking going forward? I mean, they are kind of the bellwether for much of our economy. And then also, which way do you think our audience is going? Are they buying or fading the metals for the next year?
Well, I'll tell you, I was walking across the office yesterday, and a guy that I know was looking at silver bars on Costco, which apparently you can buy.
Yeah,
and
you can buy,
with a Costco card, you get 2% back, and it's not much of an arbitrage, but he actually says sometimes the pricing is a little bit below spot level, which is kind of interesting. I actually think that gold kind of became its own little meme stock this year, and it dragged silver along with it. So even though Mike's kind of getting out and saying that was perfect, I actually think that I would probably rather lean long, and I think our audience would too. So calls.
Wow. What a weird
Interesting.
Yeah, Uncle Mike fading the metals, Flowmaster going long the metal. What a strange day. Let's see how our audience is lining up. You know what? Our audience agrees with the Flowmaster, Uncle Mike. They're saying, the hell with you, you metals bear you. 75% right now want to buy at-the-money calls in GLD and SLV. Only 25% want to fade it like Uncle Mike. So, wow, this just went live earlier today, so doing a later one this week. So get in there. You got some time to make your voice heard out there. But a fascinating one. I got a feeling we'll be talking about it again a little bit later with our good buddy Dr. Vix on TWIFO as we keep rolling into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on out here in the markets. Well, let's catch you up with how the markets are evolving since we started the show. And if you were hoping for that little bit of the worm turning, a little bit of that turnaround like we've seen a lot, at least so far, that's not happening. The sell-off exacerbating. S&P off over 1.5% right now, shy of 67.5 in the futures in the S&P. The Dow off 1.25%, NASDAQ off almost 2.5%. So the downside kicking in. Those bears are hungry. They haven't been fed in a while. They're gonna feast while they can. VIX cash popping all the way up to 21 right now, which is certainly making those D's calls we were just talking about in VIX land look a little bit more attractive, I think, than they did even at the start of the show. What were they? They were the D's 21s for nearly $2. So looking pretty juicy out there right now. But around the horn we go. Mr. Flowmaster, sir, what are you keeping an eye on in the markets until our next show, sir?
Well, I do think NVIDIA earnings, as you said, doesn't usually move huge. That's not kind of what drives it. But, it is the name that I think dragged the Mag 7 higher. And so that's next Wednesday. As I said, I'm playing around with as much data as I can assemble on this Mag 10 index option. That's the Mag 7 plus Palantir, Broadcom, and AMD, and we should get that live in about it should be later this year. And so just try to kind of think of different use cases for that, because it's an interesting product. It's an equal weighted index. It's not cap weighted. So it gives you kind of a very different style of kind of volatility and diversification within the Mag 10.
All right, and Mr. Uncle Mike, sir, same question for you, sir. What are you keeping an eye on for the coming weekend until our show on Monday?
Well, we do. I guess the video is after our show on Monday, so I can't say that. But continuing to keep an eye on these markets. We're pulled back and seeing how we're going to react to the shutdown. And it seems like maybe this was like a buy the rumor, sell the news type of thing, I think you were saying. And seeing what other news can come out now that the shutdown is over. So looking macro and keeping an eye on the Middle East, as you always have to. And, you just always have to.
All right, that music means we've come to the end of the show here, at least for today. If you want more show in your lives, though, we'll be back in a little bit. A rare appearance on Twifo by our good buddy, Mr. Dr. Vix, doing triple duty on the network this week, talking Europe on Tuesday, talking all things probably energy and maybe some rates and all sorts of other commodity vol on Twifo. And he'll be talking vol on Vol Views tomorrow. Maybe, who knows, maybe we'll talk a little bit about this new VIX decomposition tool on the show tomorrow as well. And folks, if you want to go check out some cool stuff in Cboe land, Mr. Flowmaster, where should they go? What should they do?
Just head over to Cboe.com/RMA for risk and market analytics. And Cboe.com in general, we revamped the website. There's all sorts of great resources there. So come check it out.
Check it out indeed. Kick around on this tool. It's in beta. Give them your feedback. Looks like some pretty cool stuff. And Mr. Uncle Mike, if folks want to check out some cool stuff, including their own ideas for how many tackles you should pull in a play, where should they go? What should they do?
Trying to think if that could be feasible somehow. But
I don't know what the end game of it would be other than distraction, but it would be hilarious to see. That could be the Iron Condor.
There you go. There you go. So actually, you just made me think of a play that I did run, that was part of an offense that ran 12 years ago. I'm going to draw it up and send it to you. Anyway, with that, the YouTube video will be released today or tomorrow. So type in St. Charles Wealth Management on YouTube, and we'll be talking about some costless collars. Also, check out my website if you are looking for a financial advisor who lives in this space, stcharleswealth.com.
stcharleswealth.com, the place to go to learn more. We got to get on out of here. Back again in a little bit with all things Twifo and Dr. Vix. If you're hanging out in the Pro, just hang out. We'll be back in a little bit. Yet another reason to join us in the Pro. A lot of fun stuff popping off in there. Then we'll be back to wrap up the day with the Hot Options Report. If you like the option block, you're going to love the Hot Options Report. It's like that trading block segment in microcosm a nice bite-sized form for you out there, listeners. And we'll see if all this wild paper is holding up through the close or if it got even wilder. Looks like right now the answer is yes. Getting pretty wild out there, listen. We're back again tomorrow to talk all things vol on Volatility Views. And, of course, for our pro friends, back to wrap up the week on Options Oddities before we wrap it up for everybody on another edition of the Hot Options Report. Then we're back again on Monday to do some trivia battling on the next episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.